Hello terrestrial everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at dollar index, euro versus Aussie dollar, and Australian dollar versus US dollar, crude oil, and dollar CAD. So last time when we spoke, as you know, we've been looking for potential bearish scenario on the US dollar, and to give you the overall outlook, well, I still think that we could potentially see at least temporary top here with these recent highs on dollar index, since market turned to the downside on lower time frames with 5 subwaves. So always when I see or can recognize 5-wave drop from a new high or from a new low, well, that's important evidence that something is changing. So if you look closely here on this intraday chart, you can clearly count 5 waves to the downside, and what follows later is a choppy overlapping price activity, and usually this represents a correction, because corrections are just temporary pauses within ongoing trend. So in my opinion, this appears to be much slower overlapping structure compared to the previous drop. So if that was an impulse, then this is a correction, and normally when correction is finished, we can expect that market will resume into the same direction as the previous first impulse, okay, which was to the downside. So even if the whole pullback here will be corrective at some point, we will continue back to the upside, back to a new high of this year, well, you still need to see a 3 waves down, an ABC formation, okay? So you still can expect market to unfold something like this. So I think that 104.50, 105 is still a very valid downside target for this market, and at the same time, obviously, other currencies such as euro or especially commodity currencies could stay strong. Now, this move to the downside, as you know, came after Fed raised rates by 75 basis points. There were some speculators that they may do 100%. However, this would probably take us closer to a recession risk, which maybe will be again on highlights today, because we will get the USGTB numbers. So we'll see if there will be another miss. Then, of course, with bad figures, then of course, I think that firstly we could see a sell off on stocks, but then quickly stocks could stabilize, because if Fed should be less hawkish, obviously that means that stock market would actually stabilize, could move to the upside. So we will see how this will all play out. Of course, FOMC was the one mover. GDP today will be the next mover. Paul also mentioned that they will be watching economic data very closely in the upcoming weeks before they make any new further decisions regarding the rates. So if data will be bad, then we know what it means. So for now, technical Elliott wave picture, as I said, still bearish for the US dollar, even if just temporary. On the opposite side of that, obviously we have the euro dollar. That's the long-term picture. We have the euro dollar here still trying to make a very nice reversal from this parity. That was the first impulse, and now we are just slowing down for a correction. So at some point, I think that we could retest the upper side of this channel. If we see an overlap with 103.60, well, then even bearish count, which is still my alternate count, could be invalidated. Okay, so let me show you this. So this alternate count still very valid, but if 103.60 is crossed, then this would be even more bullish for the euro, or bearish for dollar in general. Now let's take a look on the EURUSD. I've been looking at EURUSD recently. No matter what ECB has done last week, it raised more than expected. The EURUSD was still somehow bearish. We have also got the CPI figures from Australia this week. There was there was inflation still, obviously still there, but not much as expected. They expected 6.2 on a yearly basis. I think it was 6.1. RBI also mentioned that they will be watching this data for next rate decision. So since the inflation is still here, I think that they will remain hawkish, and this is driver for Aussie strength. So what I'm seeing here is a very nice ongoing weakness after a completed complex correction here at 1.54. So I think that more weakness could be seen here because we need 5 waves down. Always when I see a completed correction, just be aware that market should fully retrace the previous recovery. So I'm expecting prices at some point to revisit these April lows. In the meantime, watch the fourth wave pullbacks. Maybe this could be nice for potential shorts. Of course, firstly, you want to see this wave 3 at least similar compared to the distance of wave 1, because wave 3 will very rarely be the shorter one. Okay. Now let's take a look also on Aussie. Firstly, big picture. Still think that we are in a bull phase just now. Temporary pause here, the longer one before market resumes higher. Notice that also this correction appears to be very similar to the one that we have seen here in this downtrend when we were tracking wave 4 pullback. So now on the opposite side of this, we have very similar to be wave B. In fact, this could also be the head and shoulders pattern, now with the right shoulders at the potential support. And if we consider also the Elliott wave theory, well, this broken channel suggests that 5 waves down is finished. And again, always when you have completed 5 waves, you should expect minimum 3 wave rise. So wave C, in my opinion, still can be in the cards. Also watch out this Hang Seng index. We are at the multi-year trendline support. If we are going to see more upside from here, which I would not be surprised, then of course this could be positive for Aussie. Now on the short term, we are seeing this recent recovery coming out of this ending diagonal. So that's the first leg of a free wave recovery. I still think that there can be some pullbacks coming. We will see what the US GDP will bring today. But overall, I think that even if someone wants to play on the long side, it's better to wait on these pullbacks. 6-9 level is a very important attractive potential support for our next bounce if we see this retracement. If not, if market just will continue, let's say, straight to the upside, then just simply I will have to wait on the next fourth wave retracement. But firstly, I want to see this leg extended, like very sharp one, to make sure that we are in the middle of wave 3. Okay, now let's take a look also on crude oil. Now crude oil, bigger picture, yes, we have seen some very nice pullback, but unfortunately that's still only a 3 wave drop. Keep in mind that also in the big picture we haven't seen a retest of 2008 highs, so in my opinion this can be a correction on the way up. If you look a little bit closely here, you can also see that this is some kind of a wedge pattern here, very similar to the one that we have seen here back in June, but in opposite direction. So this triggered a lot of bears here, and maybe something on the opposite side could be now the case as well. So that was a first break higher. Now we are consolidating and looking for a wave C, wave 3 recovery. Now basic technical analysis also suggests that we could be approaching potential breakout point. Watching this head and shoulders bottom formation here, the breakout point would be around 100, so very big level here. You want to see a daily close above that price figure, maybe even better a weekly close, to make sure that pulls are back in play. If that would be the case, then of course I would be looking for more upside in crude oil next week, and this could be bearish for dollar CAD. So with that in mind, let's take a look on what I have on dollar CAD here. Well, we have some very nice reversal here going on after throwover formation with an ending diagonal for wave C. We are seeing a very strong drop, which looks impulsive on a smaller time frame. So here is the 4-hour chart. Notice very strong drop here below this channel support. So I think that this represents a change in trend, and in my opinion more weakness could occur after wave B2 rally. Now very nice resistance still remains at what, 12915 up to 1.3 levels. So that's the zone where I want to see potential retest before market sees more weakness. But in some occasions you will see that market is that bears are very strong, and they will in some cases very rarely offer you any good risk reward setup. But unfortunately at this stage I just cannot look for any potential trades here. I just want to see something more deeper here to the upside before attacking shorts. Traders, thank you very much for attention. I hope that you enjoyed this video, and talk to you soon. Bye.